Yes, I think it was definitely beginning to be a very difficult investment environment for all investors. But I think sovereign wealth funds as long-term investors looking for value, have really struggled, particularly in private markets and taking direct stakes. Over in 2019 and even beginning in 2018, I think we noted this in last year's report as well. High valuations in the private equity markets, increasingly illiquid stock markets as well, have made these, and a really difficult IPO. Really difficult IPO environment last year made it very difficult for them to kind of really double down on their investments. So we did see a slowing in direct investments last year, but that was very much before COVID-19 kind of hit.
The market performance, as we know, has been strong over the last 6 or 7 weeks. Who do you think has benefited from your understanding of where different funds are invested at the moment in the equity markets, apart from obviously the Saudis, who seem to have done very well by buying into companies like Carnival at the lows? Who else has done well, do you think, through this recent phase?
So earlier in the year, we did some research with State Street using some of their custody flow data, which we were trying to understand what sovereign wealth funds have been doing just prior to COVID-19 affecting the financial markets and in that kind of period. And actually what we found was that a lot of sovereign wealth funds were actually relatively cautiously positioned going into the crisis. They had relatively large cash positions because things had been expensive and they had been beginning to sell off. So what we were able to show by talking to sovereign wealth funds and by using the custody data from State Street was that very much that these sovereign wealth funds were buying and rebalancing their portfolios during that market, that really strong dip in the market. So I'd imagine a lot of those funds that were had very good institutional discipline around rebalancing in the listed debt market will have done really well. I think also, as the report that we're publishing today mentions, is that a lot of sovereign wealth funds have been, and we've continued to see this year, have been investing in sectors like biotechnology, like software and services, digital services, that have actually, done really, have done comparatively very well. During this period, obviously looking for vaccines for biotech, all of these technologies that enable us for me to talk to you from home, for us to work from home, have done relatively well. And that was something that sovereign wealth funds were doing quite a lot of investment in over in 2019. So we saw $3 billion worth of investment go into software and digital services last year, up from $2 billion the year before. So there's been a really big uptick in these kind of technology, in these kind of investments. So we would expect to see those funds that have really looked at these segments will have done pretty well.